Let's get a closer look at China's economy with Yan Liang from Portland, Oregon. Yan is professor of economics at Willamette University. Welcome back to the show. These GDP figures, lots of people saying very good numbers. What's your reading of these figures?
Good to talk to you again, Roee. So I think the whole set of numbers indicated that China's growth has been solidified, it has sustained, and also becoming more balanced because we see the usual growth of industrial production that instead expanded by 8.3%, the retail sales expanded by 12.1%, and export growth also remained very strong at 32.3%. Fixed asset investment increased by 12.6%. So all these shows that the second quarter the growth rate is going to be 7.9% and bring the entire year half year growth rate to 12.7%. So I think it's a great sign that the economy continue to remain strong and remain resilient. Of course, there are some sort of uncertainties ahead, mostly because of rising raw material prices, energy shortages, and also global business environment, and also the pandemic, which is still ongoing.
Yeah, you're talking about the first half of the year there. Looking ahead the second half of the year, there is some concern about a possible slowdown in economic growth. You touched on some of the subjects. Do you expect a slowdown as well?
Well, I think it really depends, right? When we put this growth rate in perspective. As we know that last year this time the economy has already rebounded, and so that recovery was on the way. And so compared to last year, then I think the second half of this year, it would not be as radical increase as the first half of the year. So, like many commentators would say that growth rate will peak out. But I think what is important is more sustained and balanced growth. In other words, instead of relying on more, industrial production and exports, if the domestic demand growth and the service sector can expand at a healthy pace, then I think it's not too important that we're going to grow at 8% as some would predict. But I think it's important that we achieve the quality growth. And I think 6% of growth rate, which is set up by the government, is well within the reachable goal.
China's economy is not an island in this world. It's highly connected to the rest of the globe. Is there concern that China's economy won't continue to grow at this pace if the rest of the world doesn't recover at a similar rate?
Yeah, I think that is a valid concern. As we know, China's growth has contributed to 1/3 of global growth in the past 10 years, ending in 2019. So it is important China's growth remains strong. So then its import demands and its investment abroad and all of these other demand would help the global economy and also the supply of very important products for the rest of the world. So I think it is important for China to keep growing at a steady and healthy rate. So to pull the rest of the world as well. So, but right now we have seen some decoupling trends, especially in the technology sector, which is very unfortunate. But hopefully, China can remain strong, especially with the help with policies like fiscal stimulus and some ease in the monetary policy as well.
We're talking here in the U.S. about concerns over inflation. We've talked about Jerome Powell's testimony on Capitol Hill. What about concerns in China, especially energy prices?
Right. Well, that's a great question. So at least I think from June, China's consumer price index rose by only 1.1%, which is much lower than last year at the same time. And the food price decline has contributed greatly to contain that inflationary pressure. So of course, there is the increased price for raw materials. So you see the producer price index has gone up by 9%. But Chinese government has released some strategic stockpiles of aluminum and copper and other commodities that help to contain inflation. So I think going forward, it's important for policymakers not to unwind the policy stimulus too prematurely, because I think it's important to strike the balance. And I think some of these temporary inflation has to do with supply side bottleneck. Especially, for example, the semiconductor shortages, which is projected to last until 2022. So I think the Fed has remained pretty resilient, and they are not going to hike the interest rate. So I think the Chinese central bank should not do that either.
Speaking of bottlenecks, what about the shipping backlogs? We're 18 months into this pandemic, and there's still container ships out there at sea backed up in these ports. How is that impacting China's economy?
Right, so that did weigh on China's industrial production and exports. We know that in Shenzhen, the Yantian port, which accounts for about 1/10 of China's shipment, was locked down by 3 weeks, ending in June the 24th. So there's some easing of that congestion. And like you mentioned earlier about energy shortages, that has to do with the cutback on coal mining and coal usages, which is great for the long-term growth. But in the short term, I think that energy shortage could weigh on industrial production. So that means that China needs to promote service industry expansion, which slightly slow down in expansion coming in June. So I think there are still sectors that need to be promoted to compensate for some other sectors. And China also need to continue to develop alternative energies and also some of the infrastructure to support decarbonization.
I hope they're